Ladies and gentlemen, welcome to another episode of the Justin Palmer Show. Today's guest is a friend of mine, Chris Aiello. I met him originally when he was the CFO of one of our investors in the real estate business that I built and own. Chris is an incredible human being. He has an amazing story about losing absolutely everything in the financial crisis of 2008 and being very young, being an entrepreneur, and his comeback from that and how he's used that to design his business that he's in today, which is also a real estate business focused on commercial over residential. He has incredible insight around the economy and what's happening in the world. And I really value everything that he says. I always bounce ideas off him about the economy and about the future of the capital markets and things of that nature. So I hope you guys enjoy and check it out. You can check out Chris on Instagram and his website. So
it's the Justin Palmer Show. Here we go. Woo! Woo!
Okay, man. Chris Aiello, I've got the question of the hour for you. How is the real estate industry going to continue to do deals now that strip clubs are closed?
It's so great. Oh man, I don't know. How do you, how do you do new business if you can't leave your house and you can't bring anybody to a strip club? What a problem. I agree. It's pretty cool. I was just thinking of Joe Cosom and all of his, all of those conversations we've had about, hey bro, bring me the Lido Club. It's so ridiculous. When's that coming back?
Never. I think a lot of things about past life, which isn't that long ago, are just gone.
Totally. It's sad.
Yeah. Well, what have you been up to in terms on the business front? Like what you were in something that I think is extremely interesting in the co-living space. I think it's probably helpful to try to quickly explain what that is for anybody who doesn't know what it is. And then also just talk about how things are going in your portfolio, because you built up a pretty massive portfolio of construction. I'd be curious to hear what's going on.
Yeah, no, it makes sense. I mean, I got into co-living, 4 years ago because it just kind of made sense in the market that we were looking at, right? I mean, construction costs, rents have gone up through the roof, right? And so it made sense to invest in something that was quote unquote affordable without any public subsidies, right? And so that was the general thesis. And I think, it took a while to figure out where that made sense. We started in New York, quickly realized that wasn't going to work for a number of reasons. And then really kind of pivoted to other markets, looking at LA as like kind of the one that made the most sense. And ultimately, what I realized about LA is that the underlying kind of zoning that has been put in place in that, in Los Angeles was really built for a suburban lifestyle, right? If you think about LA as a market going back 100 years, it was just it was a desert, right? That just got settled as like suburban housing. And it became a metropolis, over the last, 50 years. And so, as new construction kind of built up over the last, 15, 20 years, it really just kind of shifted to all luxury housing. And so there's massive missing middle, way worse than what you see in New York. New York actually has a lot of, good organic housing stock in the boroughs that you can, are relatively affordable compared to the rest of the world. LA just doesn't have that at all. And there's no really way to produce it, right? And so, so looking at co-living as an asset class, obviously it's a shared housing model. So you live with roommates, which is something that's been going on for forever, right? People have lived with roommates since the existence of housing. And so, the transition into making that into a legitimate asset class is really technology, right? How do you lease and manage that space in a way that's effective, right? And, like whatever, 15 years ago, when people would, get out of college, they'd move to a city, they'd find 3 or 4 roommates, they'd grab an apartment together, they'd figure it out, right? And I think slowly that's evolved into this, more, Craigslist mentality of, hey, I just need roommates because I need to afford to live here, and it can be anyone who's random, right? And so now I think there's more randoms living together than friends in reality. And then, so as we were looking at the space, the operators that were coming online had all kind of said, all right, I can build technology to basically roommate match and essentially lease these things essentially per bed, right? And to create the maximum amount of affordability. And so, intertwining all that, looking at LA, there's this arbitrage in the zoning, which basically says that all of my impact costs, all of my parking requirements, all of my unit requirements are all based on, this low density environment. And everyone's just been building studios 1s and 2s forever. And so if you then build a 5 or a 6 bedroom apartment, you get the same benefits. I only have to park 2 spots for a 5 bedroom apartment versus a 2 bedroom apartment. It's the same cost of, fees, et cetera, right? So you add all those things together and there's this, land arbitrage on top of the fact that developers are valuing land based on the fact that they can only build studios 1s and 2s, right? We're valuing land based on we can build way more density this way. So it just gave us a huge advantage looking at the market as a newcomer to LA. So we were able to acquire a bunch of stuff, right? And, we have probably about 1,500-ish beds in some level of construction or pre-development out there. And, really just kind of plugged away over the last 2 years. I mean, I think what's interesting about, where this goes kind of post-pandemic is early on, we actually identified the reality of like the demand for co-living, which was at the end of the day, people are looking for private space. They're not looking for shared space only. They want to have some level of privacy, and the easiest way to do that is a studio, right? In any market, except that it's just unattainable for most people. And so we started building, essentially a private bedroom, private bathroom, and then you share the kitchen and living room. So we emphasize kind of no sharing of bathrooms immediately. Now we have some of those situations, but now like kind of post-COVID, it's really kind of proven out to be substantially important to, have private space, even in a roommate situation. And I think, temporarily, the demand for housing is low in cities just because people got the hell out of there. Mm-hmm. But long term, it's just not realistic to think that people aren't going to move to a place like Los Angeles post-COVID.
Right. Yeah. I'm wondering if there's going to be a hesitancy to lease those spaces because of the shared kitchen component, or is that just sort of a non-factor?
Well, so what's interesting is that we clean it once a week, right? And so our operator, goes in and cleans, right? And so that's a value proposition to pitching your prospective tenant, right? In a normal roommate situation or any other roommate situation, you're cleaning it yourself, right? So now at least you have a third party that comes in, cleans the entire thing once a week. You're guaranteed to have a clean space, right? And so now, I feel like that is like a huge amenity, right? For someone to say, all right, I'm going to make a concession about sharing a few things, but I need it because I can't afford another $600 a month to live in my studio. And for that, I'm going to get some benefit out of it. They're going to at least clean it once a week. All my furniture's included, all my utilities are included. I'm just saving money. And I have like a clean, nice place to live versus the alternative, which is a random roommate situation in a subpar building, or just generally commuting and living in the suburbs, which I just don't think is a solution for pretty much anyone who is under the age of 35 and doesn't have kids.
Right. Yeah. And for anybody who doesn't know what co-living is, it's basically an apartment building of these units that Chris is describing, which is shared units basically. And you have some amenities like a bathroom and a bedroom that are yours, and then you share a living room and kitchen, which is that is highly innovative in the commercial real estate space. I'm wondering, you guys ramped up pretty quickly. How was financing the first few projects?
Oh my God, it's hard. The banks, they don't understand, right? You look at you talk to a banker, right? Someone who's probably in their mid 40s to early 50s. They've been at the bank 20 years. They underwrite a million deals. They're expecting a certain layout, a certain price, per foot, all the check the box items. And this doesn't fit inside any of them, right? And so, the first question is always, why would anyone want to live like this, right? And it always comes back to the same issue, which is, listen, people aren't organically choosing to share apartments because they absolutely want to. Now, of course, there's some people that are like that, but for the most part, people are just like, hey, I literally make $60,000 a year. I'm 27 years old. I can't afford a $2,400 studio. Just the math just doesn't work, right? And so if you look the last 30 years in this country or so, rent has gone up way more than wages, right? In pretty much every MSA in the United States. And pretty much every suburb too, right? And so it's just not trailing. The wealth gap continues to get worse. And so, co-living obviously, provides that. And so convincing these lenders, to essentially loan like a normal real estate deal, is just pulling teeth. And it still is today. I mean, I think we've had a lot of success, and now I actually have a track record to kind of point back to. I'm like, hey, we finished the building. This is what it looks like. Size is good, and other lenders that have actually made loans now are peers to the other groups, and they're like, okay, if that group is lending, then I feel comfortable. So I think it's just one of those things where over time, it's just going to continue to improve.
Yeah. And in terms of what you're seeing in the marketplace, you guys have been pretty successful at leasing up all the buildings, filling up the buildings that you've built thus far.
Yeah, I mean, the demand has been great. I mean, and our operator has, our Common is our main operator. We also work with Ali. Both of them have opened numerous buildings across many different markets. And so this has already been proven, at a small scale, but the demand has been there, right? I think Common today is getting somewhere between 20 and 30,000 sort of indications of interest on their website per month.
Wow.
And they've only opened about 2,500 beds in the United States. And so the demand is just way more than the supply. Now, not everybody that, is interested is at the same price point. If you look at co-living and roommate living as an asset class, it's not just kind of what we're doing. It's also going all the way down to pods, right? People are living in bunk beds in the middle of, these cities, right? I think in San Francisco at the peak of things, people were renting pods for $1,200 a month. Because they're literally so unaffordable. And so, if you look at just kind of that landscape, and obviously our own portfolio, I mean, it's just unlimited demand at a certain price point. So we're just constantly looking for ways to, just create optimization, in the design, basically the minimum size bedroom that people enjoy, the minimum size bathroom, how much kitchen space does everybody need on a per person basis for this to work? And then obviously backing into development costs, where does that kind of leave us? And so far we've been able to achieve and underwrite to essentially a significant premium in yield over a traditional multifamily building. So the evidence is there, it just needs to be done at scale. And so we're almost there. We're in the process.
And you guys, I recall, toward the end of last year, you guys launched a big capital raise. Have you put the brakes on that because of the pandemic, or have you continued to do that and sized it down? What's the strategy update going forward?
Great question. So we went out to the market really September, October last year. As fundraising, it just takes a long time, right? It's a lot of conversations, a ton of meetings on planes, back and forth. We took all the way that through into 2020. Right around February 1st, we actually had 3 kind of offers for equity from 3 very large institutions. You know them all by name. We ended up signing a term sheet with one of them on March 18th, which ended up being pretty awful timing. We actually had the following week, we had a plane trip to LA scheduled with members of their investment committee to come out, tour the properties, do the whole dog and pony show before kind of going to committee on the strategy. Ultimately, a week later, basically the world shut down. And so it put that whole kind of process on hold. We've stayed in touch with all those groups over the last 6 months, giving them all the updates we can. But, as we all know, when it comes to fundraising, right, investors need a floor to work off of, which is, okay, this is my this is what comps are, this is what construction costs are, this is what cap rates are, all these floors, right? And then you basically say, all right, if I'm going to make a bet on something, these are the variables, right? And so we had done a really good job kind of getting those variables down to 3 or 4 items, right? And now in a post-COVID world, those variables are probably 20 or 30. And so getting through an investment committee process is virtually impossible. And so we really kind of had to pivot our entire thinking around that. And so we just started looking at different kind of financing options. We actually just got a term sheet today on a different structure, which is really like a ground lease and a leasehold financing structure, which I'm sure you're very familiar with. That's a product that's kind of been delivered in the market the last 3 or 4 years. And they're starting to figure out how to price it properly so that it makes sense for the developer. And it's something that we're looking at because, frankly, it's really the best option right now. I think, all of the institutions they're really interested in what's going to happen here and how co-living plays out, because if it plays out the way we think it's going to, and it shows that it's strong, they're all going to join, right? Because it's really just another segment of multi in their mind with a better yield, right? So they'll all jump back in, but it could be a long time before that happens. I mean, it might be another year. We just don't know. I think there needs to be time for data to prove itself. And until there's really kind of a normalcy that's put back in place, and we can, ascertain where the bottom has dropped out on rents, across the board, multi and co-living, right? They're all going to go down. Right? This is what happens. Until there's a bottom there, like we're not going to know, how they feel about investing, unfortunately.
Sure. And it's fascinating to me because I'm watching you. We've gotten to know each other pretty well over the last almost decade, and you're talking through this totally unknown scenario with so much confidence. And I think it's important for people to understand this isn't your first business adventure,
right?
And what was your first venture in business, and what year was it? Give a little background on your history.
Yeah, absolutely. I mean, I started my first real estate business in 2004. I was 22 years old. I just graduated from college. I was working for my dad, doing something that had nothing to do with real estate. And I had virtually no real estate experience outside of a house that buddies and I purchased down in Orlando, Florida, back in 2002. Which we successfully bought in pre-construction, closed, and then kind of leased out to families that were traveling to Disney World. And so we got the first real kind of taste of what a rental property would be, and then subsequently flipped that about 15 months later for a pretty decent profit, heading into my senior year of college, right? So basically, I raised all my beer money for the year. And so that was my foray into real estate. I, kind of loved it, right? Because it was fantastic. And if you look back at the time frame, we had a big run up in this country in housing from 2001 to 2007. So just a product of timing. Of course, when you're 22 or 20, you don't remember that, right? And so basically right after college said, I'm not going to go be a CPA like my accounting degree tells me to do. I'm going to be an entrepreneur. And I'd always been an entrepreneur since I was, probably 13 or 14 with all kinds of different stuff, which we could get into. It's always fun. But basically teamed up with a buddy of mine. We said, real estate makes sense. We can do fix and flips like everybody else can. Let's spend some time figuring out where to do it. We had access to a little bit of capital through some family, friends and family. And we kind of settled on Charlotte, North Carolina as a market for a number of different reasons. Really, the main ones being, one, it was affordable. We could actually buy deals that were sub 100K. So we could kind of jump into the market with not a lot of money. And then two, really, all the population growth that's been going on in Charlotte and just the Sunbelt states in general over the last, 20 years, we've just felt that was going to continue. Right? At the time, Wells Fargo, which it was Wachovia at the time, was actually headquartered in Charlotte, and so was Bank of America. And so there was a ton of just influx of population, good jobs, good finance jobs coming into the city. And so it just made sense to basically invest in that MSA. Not really knowing anything about real estate. It was kind of like, just kind of made it up, essentially. Pitched it to a couple of groups. We went down there, started talking to a local partner because we needed some local expertise, somebody on the ground that could at least help with, figuring it out, right? And so I got in touch with a group that was doing kind of fix and flips, the last 3 years prior to that, was looking for some new equity sources and really kind of just put together a JV, which is something that, I've now done a bunch of different times in my career at this point. And started out really good. I mean, 2005 was interesting. 2006 was interesting. Made a bunch of money. Did a bunch of good deals. The market was hot. What we didn't realize was that all of our buyers for all these properties were all basically getting subprime loans. And so, buying a property for 70 grand, putting in, 10, 15,000 of short-term, repairs, painting, making it look pretty and then flipping it, for 110, 120K, was really simple. I mean, because basically the buyers we had a list. I mean, I remember talking to brokers and they'd be like, hey, I have a buyer list of 20 people. As soon as you're ready, like we can close. Right. And they would basically line these people up. They'd buy the property. We'd close. They'd get 100% financing. Right. And so, obviously, it looked like the gravy train was never going to end. But it certainly did really quick. And I think we knew as early as 2007, like March of 2007, which was like way before Lehman even went under. Mm-hmm. We knew that the spigot stopped. Right. And so like, I remember having like 4 or 5 closings set up for like one week, and with one broker who had a bunch of these buyers, and one lender. And I remember him calling me the day before the closing and be like, you're not going to believe this. All the lenders basically pulled their commitments. And so all these people can't close. I'm like, okay, well, get a new lender. Right? And he's like, well, I've been trying. And so like within a matter of like 30 days, like the music basically stopped. Right. And so it was just literally musical chairs, like, what happened. And so 9 months after that, the housing market in Charlotte and pretty much everywhere else went down about 75%. I mean, wow. So houses that we were selling for $120,000 were basically, we had an investor that would be willing to give us, 30 grand for it, to close in 2 days, right? And like, so there was literally not one owner user buyer that existed in the market for, I don't know, maybe 3 years after that. And so it was just it was a really interesting learning experience. And, luckily I really didn't get hurt that much. I mean, I went through some struggles, had a couple of loans that went bad, had some investors that I wanted to pay back because they were personal friends, did all that. But yeah, it was a Harvard education in real estate, right? Learning the hard way. But it was good because it set me up for a lot of different success later, right? And especially, in the current business that I'm running, set it up in a way that I think we've avoided a lot of that in what amounted to a really absurd kind of downturn here. We didn't over lever anything. We've been really conservative in how we think about investing in real estate. And so I think it's going to ultimately keep us above water, even though right now it's tough.
Right. Your story is incredible. And I think it's hard for people to comprehend what it was like. You hear all these stories in the media about what it was like from the other side, right? What it was like in the banking and the capital markets industry, which I don't know that people can relate to that. You were on the ground making investments at the house by house level. And right. That it's just a completely different view of the universe than what's been provided by most mainstream media, because they focus on what's big. And so I think it's incredible that you navigated your way through that scenario. I mean, did you have properties that you had to give back to the bank?
Yep. We gave back. Well, it's kind of funny that you say that because we tried to give back, but most of the lenders went out of business, which was a really interesting kind of situation. I remember having a couple of deals where I actually found a short sale model, right? And so you go through a normal short sale process where you basically say to the bank, hey, the loan's $75,000, the house is worth 40. reality. The guy's willing to pay 30, but you need to accept less. You'll get a check for 30. We can close whenever. Right? And I remember the banks being so inundated, and they had so many defaults that they literally didn't have enough people to field those requests. It was just a black hole of insanity. And then ultimately, a lot of the lenders went under. And then the loans were sold a million times. I mean, what was kind of interesting and we did deals with, where I got financing or my partner got financing, or we did all cash with investors, just depended on the deal. And so some of those projects that we ended up kind of defaulting on, we had tried to give the keys back to the lender. And really, they actually were just like kind of lost in the shuffle. Like the lender actually never foreclosed. They went under, they went out of business. The loan got sold so many times, I don't even know what happened. Like we literally just walked away because it was like a never ending problem, right? What's funny is that it never came back. I mean, if you go back to the same areas that we were buying in, the houses are still selling for less than 100K, literally never returned. That's how damaged it was. And so, we just kind of walked on some of the stuff. It was really, really crazy. There were so many groups that we knew that got absolutely crushed way worse. I mean, like it could have been so much worse. Let's just put it that way. I mean, we had met this group that they had gotten into multifamily too. They'd done a bunch of different things. We met a group that they lost like 30,000 units in that debacle.
Wow.
Of just, hundreds of millions of dollars of a portfolio that they just couldn't recover it from. I mean, even in the multifamily space during that time, in those areas, like, Class C multifamily, the recession was so bad that, people that had properties that were 96% occupied with 94% people paying to, basically 40% vacancy, 30% collections, to the point where just there's no chance you can service your debt. And so, I mean, listen, I think it's a lot worse than people even realize. The lenders were certainly, predatory lending. It was happening all over the place. These people were not qualified to buy homes. And it's sad because they were just being taken advantage of. So so many people got hurt in that situation. It's awful.
Yeah. Yeah. I feel that, the Band-Aid that was put on that by the US government in the solution, I don't disagree that it stabilized the economy, and it's easy to criticize something when you don't have the full picture. However, I don't think the US economy ever really dealt with the repercussions and the restructurings that were required in our system from 2008, 2007, 8, and 9. And I think that's part of what I'm worried that's going to resurface now with this pandemic. And it seems like some of the social stuff that's coming out is it's just pent up from this inequality that was built up from that experience.
Yeah, no, I agree completely. I mean, I think, to kind of look at what happened kind of post that, right? We had this huge kind of run up of asset values again. Rents went up a ton, the stock market went up a ton, and interest rates really kind of stayed low for a long time, and they really couldn't raise them. And so they tried in 2018, and the market reacted so poorly to it. And so then they had to lower them again, right? And then now, COVID hit, right? And they lowered them to zero. I'm not sure if they'll ever raise them again, right? And so that's, printing the money, interest rates being zero, like if you add all those things up together, at some point, like we're all going to have to pay the piper, right? It's not a free ride. It's a massive asset bubble that's really kind of been going on for 30 years and has been fueled the last 10. It doesn't seem like there's any end in sight. I don't know how it can be fixed. It's a major problem.
Yeah, this seems like the problem that's facing our generation and the generations that are coming before us is dealing with how we're dealing with money supply, dealing with the debt of the US government, and then dealing with how to take care of people that maybe don't have the opportunities or haven't been taken care of by society in general. It's like this is a huge problem. Yeah,
no, it's all intertwined, which is sad. I do think, just looking at LA as a market now, I've spent so much time in the last couple of years, it's truly a market of haves and have-nots, right? I mean, which is just, it's so sad. I mean, you drive by to go get, a $6 cup of coffee and there's, 4 homeless people inside. Like, I mean, like, how is that okay? Like, how did we get here? Right. I mean, I just feel like that there's just no way that a healthy environment can ever continue, right, with that happening. It's human suffering. And I don't know if it's anyone's individual fault, right? And you can't argue for, in a capitalistic society for people to not, take risks and invest in businesses and, develop real estate and try to get better for their family. Like, you can't argue that that's a bad thing, but there's got to be some happy medium in there where people can live, right? A living wage, if you will, that allows them to not be homeless or even just be able to have an opportunity to get ahead. I just think it's so hard right now. And you look at kind of college, right? Not to kind of go really deep on the stuff, but I feel like college is a scam, in a sense, right? It's been, the cost of college has been overridden, but it's up, 700-800%, from when our parents kind of went to college. And, it just doesn't pay. It doesn't pay to go $200,000 in debt to get a $75,000 a year job. Like, it just doesn't. Right. And so there's no guarantee by, spending $200K of debt to go is going to get you to making $250. Like, it's just to pay. It's just not, there's just no guarantee. And so there's just a bunch of cultural issues too that I think are just fueling it. We'll see. I mean, maybe COVID will change that on some of those things that do need to be fixed. And our clear bubbles, right? Like, that's a clear bubble. Like, there's no reason for a college that literally 30 years ago you could go for $2,000 to get a degree per year. That's now $48,000 a year. Like, this just doesn't make sense.
Totally.
Why?
I look at it the same way I look at bottled water, which is, I had this realization I don't know how long, a year or two ago, a couple of years ago, when I was walking around Manhattan, and I'm like, why is it fucking $4 for a bottle of water just because this deli's on the corner of 38th and 9th in no man's land? I can get it for free coming out of the faucet. And I think that translates to education, which I've been having this conversation with, my wife and my family. I don't know that my kids need to go to college. I don't know that they're going to need to. I don't know that the next generation is going to need to do that, especially when you can come out, get life experience, go find your niche, whether it's entrepreneurial or being a part of a company that is doing something important, and avoid all that debt load. I mean, it took me almost 10 years to pay off my student loans, and they weren't anywhere near $200,000. Right. Anywhere near. They were a fraction of that. And because I went to a really cheap school, and I went to college because I dropped out of high school. And so I needed to reset the bar so that people would look at me as someone who could finish something.
Yeah.
And so I wanted to go back to something that you said that I think is interesting, which is, how did you know when to let go of the bad investments? Like you said, some of them you just walked away from. And I think that's an important thing for people to understand, because there's times when you just need to move on from something. It doesn't mean that you're giving up on who you are, what you stand for, or what you're doing. But this is the same way that the most sophisticated investors in the world look at their investments. It's a process called don't put good money after bad. And I think that's an important lesson to learn. I want to know how you got to that place, because you were young when all the shit was hitting the fan in the financial crisis.
Yeah. I mean, it started out as a math problem, right? Which was, okay, great. If I own this property and it's worth X and my loan is Y, how much longer do I have to wait for it to ever be worth that again? Right. And what can I rent it for? Just literally running math. Right. And math just never worked. Right. So we actually it's funny that you said that, because we had gotten some advice from, a mentor, if you will, about what should we do? And his advice was borrow the money and get out of the debt, save the credit, and don't go bankrupt and all that stuff. And I remember doing the math on that and being like, okay, great. Like, I'm going to borrow, $300,000 from who, somebody, at what rate, to basically save my credit, that doesn't make sense, especially when you do all the diligence on what happens when you just wait, right? My credit score today is like 830, right? All I had to do was basically just become a good citizen again and pay my bills, all the other bills, basically, right? And so, we just waited. I mean, even being young, just trying to look at it and saying like, it's not the end of the world. I mean, look, it wasn't that simple, right? I mean, I had a lot of dark days. And, ask my wife, ask my parents. It was tough, right? And I lost some of my parents, in that whole situation. And so, it was very, very difficult. But ultimately, I think it's almost easier when it's so bad, because that's what the financial crisis in 07, 08, and 09 was. It was really bad, right? And so it was easy to not put good money after bad, because it wasn't like it was close, right? In other recessions or other, situations where you're as an investor where, it's close, where you're like, all right, hey, well, if I, reposition this or whatever, you might be able to survive. Sometimes in those cases, it was still way better to walk away. But you get kind of confused, or, essentially you're biased, right, to the deal, right? Because you're so into it, right? And you've put all of your hard work into it, right? And so, identifying that is definitely a critical, kind of part of being an investor. Fortunately for me, and at the time, it just made sense, and I saw it that way.
Was there any specific moment or series of moments that you recall that kind of led to that realization, or was it literally just putting things on paper, doing the math, and figuring out, okay, this hole is a lot bigger than I thought it was?
Well, I mean, it was that, right? That was the first thing we kind of did, right? And then I think, the demoralization around trying to kind of be a good borrower, right, on defaulted loans, and basically trying to find a short sale buyer, trying to work with the bank on, something, right? And them essentially just not being receptive at all, like being lost in this black hole of like, being on hold for 45 minutes to get another person, and you have to explain for an entire hour what happened to get them back up to speed with the guy that you were on the phone with yesterday, right? After doing that for weeks and weeks and months, like trying to like kind of do what I could and getting absolutely nowhere. I mean, I think that was probably the biggest realization. I remember, I just remember being like, this is insane. Like the world is not set up for this. Like they're only set up for good times. I mean, even the big levers, like we had some with JP Morgan, like I couldn't even get anybody on the phone, right? They were literally a mess. I mean, and so it was just, I think at that point was when I remember sitting in a room with my partner and just being like, there's just literally nothing we can do. Like it is what it is. Yeah, I mean, I think that was, I remember sitting in his living room at his parents' house being like, we're just going to stop paying. Like we can't, there's nothing to do. It is what it is. And just moving on mentally. It was tough though.
Yeah, I can only imagine. And the part of the reason why I'm asking is because I think this is something I've dealt with on investments, in relationships, in life, in change that is a part of life. You have to, the key to continuing your life is just moving forward, right?
Yeah.
Even when it fucking sucks, even when it seems like there's no way out, even when the cards seem stacked against you. And I can only imagine, especially that young. I mean, I didn't have that type of responsibility when I was that young, and going through that, especially with friends, family, money, that's a fucking hard thing to deal with. That's a really challenging psychological predicament that people find themselves in. And I don't find that a lot of people talk about it.
No, it took me years to recover from it. I mean, even all the way up to 2014, 2015, I was questioning, the concept of, being an entrepreneur again, right? Because of that. I think the biggest thing that I learned from it, taking into the discussion around making investments, was really don't make an investment unless there's a way that you can walk away, right, in a thoughtful manner, right? That could mean that you lose money, but there's got to be an out, which is okay, if things become a problem, I can cut it off here, and things that are truly important, like my family or whatever, are not affected, or they're affected in a way that we're going to survive no problem, right? I mean, that was like a major kind of learning, right? And because I could have been way worse, right? And so as I designed how I got back into being an entrepreneur and developer in real estate, everything that I've structured to date in my business has basically allowed me to isolate that and say, like, at any moment, right? And I remember in the middle of April being in a place like, hey, if this really goes down, down the tubes, where and what that could have been is, okay, maybe COVID is way worse than it ended up being, and 5 million people die. Right? You want to talk about a recession? Forget that. Like, I mean, we're talking about cataclysmic debacle, right?
Yeah.
Everything's screwed for decades, right? On something like that. And thankfully that didn't happen, right? And it isn't happening. It doesn't look like it's going to, but just trying to, like, where could I cut it, right? Where could I cut the business, or cut the investment, or cut something that I basically still have legs, right? I think that is so critical. And it's easy in an up market, or, everyone's a genius in a bull market, right? It's easy to completely go over your skis when things are, seem easy and they're fun, and, oh yeah, let me just lever it again, right? You got to be really careful. Especially in real estate, because it's so capital intensive that you just can't survive when things go wrong if you set it up wrong, essentially. I mean, and that only comes through experience, though. Unfortunately, it's not something you can learn in college. It just doesn't work. You can only be in the real estate field to figure out how to get out.
Yeah, it's funny, as you're talking about this, I'm seeing a lot of parallels to what's happening right now, but I just don't know if people are going to come back to cities, right? Obviously there's a lot of investment behind city. There's been so much capital investment in cities over the last 10 years. Like, I have no idea what the number is. Just flying around city to city, as we were looking at deals, we were building stuff, we were looking at markets to expand to. There has been billions upon billions upon billions of dollars put into towers in cities. And now they're just shut off. They're shut down. And I'm curious to see what's going to happen, because I think there is a probability of a scenario out there where people don't really return in the same way. It doesn't mean that people aren't going to live in cities, but if you don't have to, you're not going to pay that rent and it's not really your product that's at as much risk as it is like the hotels, the offices, the super expensive apartment buildings that are fully amenitized and you're paying $4,000 a month for a studio.
No, I know it's certainly a risk, and it's certainly on everyone's mind, which is what is, obviously causing a lot of pain and suffering on the fundraising side, right? Because everyone's asking that question. If you've been in real estate for more than 20 minutes, you ask that question. And so I think that the issue, though, forget real estate for a second. Just if you think about the dynamic around how business happens, so everybody, no matter what business they're in, doesn't matter what it is, literally any product, anything that you're involved in, there is a sales pitch, right? There's sales have to be made, whether you're being sold or you're selling something, right? And it's very, very hard to build new relationships and to create new business on Zoom. It's extremely difficult, right? And so if you think about that dynamic, right, which is, all right, I need to pitch new clients, I need to pitch new investors, I need to do things, right, that require me to be outside of my home office or just being a digital nomad. When you think about how business gets done, ultimately, like, that's still going to have return, right? I've been asking a lot of different people in a lot of different industries, mainly around one comment, which was, how are you guys doing new business development today, right? And I keep hearing, we're not. We're only focusing on our existing clients. Okay, eventually that's not going to work anymore, right? You can't continue to grow your business and be successful with your existing clients, right? You have to grow, right? And everybody is set up for that reality. And so if you think about that, as that eventually starts to put pressure on business, whatever it is, it's going to require more effort, and it's going to require, leaving your house, going to an investor pitch with 14 people, right? Like, I just can't imagine a world that, where you can be able to successfully sell your product and create new relationships via a computer. And so I think that what will happen is it will never go back to where it exactly was. It will be some delta in the middle of, yeah, I can work from home when I have email days, but when I need to have 16 meetings, I'm going to Manhattan, right? Or I'm going to San Francisco or whatever it is. Or if I got to fly to Chicago to meet that client, I'm going to do it. Like, so I think it got a little bit out of control, right? Pre-COVID where, people were, if you're not in the office 80 hours a week, like you're not working, that mentality definitely has to go away a little bit, but that was unhealthy to begin with. So I think getting to a happy medium is actually just going to be better. And I think if you look at how jobs have been created in the last 20 years, they're not being created in the suburbs. They're just not, and they haven't been. And so if you add those two factors together, even in a tech society, if you need to do on the ground sales, like every business, eventually you're gonna gravitate back to the office, and there's no better place to be in a clustering environment than in a city. So this, I think, is going to be a blip in the radar. It may last 5 years, right? It may not be short, but I think ultimately the city aspect of living will continue on a similar path the way it was before. It just may be a little bit different this time in the sense that new living situations might exist, right? A different demographic might exist. Maybe people like who were holding on in like Manhattan, for instance. I have a lot of friends in their late 30s that had kids in the last 3 or 4 years that were holding on for one more year in the city, right? COVID pushed all that out, right? But if you're 27 years old and you work at a tech company and like ultimately like your buddy who's been going into the office every day gets promoted and you don't because you've been at home 5 days a week, like what are you going to do? You're going to go into the office. And so like I just think that culture will return, in a post-vaccine where everyone like stops caring world, which just may take a long time. But I just can't imagine how it goes any other way. And when you look at the suburbs, it's not like it's super affordable to live here. And there's nothing to do. I mean, I live in the suburbs, right? And it's expensive. I mean, my neighbor's house is for sale for $1 million. Like, good luck if you make 75 grand a year. You're not buying it. So I don't know what you're doing.
Yeah, I go back and forth because my tendency is to agree with most of what you just said. I just feel that there's a newer generation that grew up on their iPhone feels completely different around technology. They feel completely different around using Zoom, using any sort of technology to connect with people in a social media driven world, which is still totally foreign to me. I remember when I got a pager when I was 14
Yep.
and that was earth shattering that people could page you with a code and then you would pick up the phone and call them back and figure out where you're going to meet.
Yep.
And I just think today's society, I'm not sure it's going to come back. I'm not sure. I think this may be a threshold thing. And I think without a pandemic, the rate of change would be a lot slower. With the pandemic, it shut everything off. So now people are going to start designing the way you took all your learning lessons and designed how you structure your business going forward. It feels to me like there's a high probability that people are going to start designing businesses around the fact that you don't have to be there in person. That does,
Yep.
Some industry like construction, for right now, you've got to be on site. Well, what happens when 3D printing is prevalent? So there's like one person, two people on site any given day, and a 3D printer is putting up a building.
Yeah.
I mean, I think like one person that I've listened to over the past couple of years is a guy named Peter Diamandis, who's he's the founder of Singularity University, and he runs something called X Prize. He's a futurist. He's like a Kurzweil. Him and Ray Kurzweil do a bunch of stuff together. And I asked him a question. I was at a conference where he was speaking. I asked him a question about, what do you think about the real estate industry and construction? And he was like, it's going to completely change, because when location becomes irrelevant through technology, and not just telecommuting technology, even transportation technology of, automated vehicles, autonomous driving, location becomes irrelevant. And I kept thinking to myself, okay, if location is irrelevant, how do you value these assets in these cities? And I stopped investing because I don't have the answer to that question.
No, I mean, look, you're not wrong, right? I mean, there's certainly that's definitely on the list of outcomes, for sure. I think the one thing that I think gives me some comfort, in near term kind of investing, right, is the fact that for those things to become, like driverless cars, for instance, the headwinds that actually exist, right, and really just around infrastructure, right? I mean, like, are so great. I don't know how it happens as fast as I think some people predict. It's one thing to go, like, to put a device in everyone's hand, right? Not to call that simple, but I can see how that has evolved so quickly, right? But like, to be able to then say, like, now I can actually physically move people in a organized manner, in the near term, like, to affect the way, let's say, people commute to a city, like, to be like perfect, right, if you will, or like basically more efficient than it's currently available. I think is just, I think it's really hard to think that that's in the near term. I think it's definitely in the long term, because I think what we have today is broken, right? And so these are solutions, right? So they're part of it. I just think that there's so much more to that story, specifically around, like, what you say, like, location becomes irrelevant. Well, one of the reasons why cities have been built so much is that it's also because you can't build anywhere else, right? There's like this inherent problem with how we've created the world, right? I mean, I just looking at my town, right? You need to go through a 47-step approval process to put up a single family home. Like, how are you going to create anything here? I mean, so I just, like, how many things have to actually change on a municipal level, like, for those things to take over from that point, right? And how long is that? Is it 30 years? I mean, it could be longer, it could be shorter, but I think in the near term, there's still a lot of value in near-term investing. But yeah, I mean, to your point, the days of saying I'm going to own a building for 100 years and be very, very happy with that outcome, I'd be very careful to bank on that, if you will, and say, oh, I'm going to leave all these buildings to my next generation. They're going to be worth $1 billion. It might not be true. It might be absolute.
Right. Yeah. Even the land, right?
Yeah.
It's hard to gauge if the land will be valuable in that much time, because things, and I want to qualify what I was saying. I'm saying things will change fast. And what I mean by fast is 20 years. It's not 2 years. It's not 5 years. You're right. There is, like, autonomous vehicles. You have to go through not only the infrastructure that's required in a city to deal with that, also the regulations, which the way that our government's working today, there's no way you're getting any of this approved, right? There's no way you're going to get stuff like this approved in the next 10 years. Right. So I think, but once I think there's going to, something's going to happen. We're going to reach a tipping point. And this feels like it may be one of those tipping points where your town starts to put things online and simplify that process. And once that happens, that triggers some innovation around it. And then that just tips the scale where it's going to completely transform how houses get built. And there's a couple companies that already exist that are 3D printing houses. And they're not big. They're like one room homes, but they're starting out just to prove the concept. And that, to me, that was something I was always interested in, because I'm like, that managing construction, which you can attest to, is a fucking nightmare. It is a nightmare. It's like herding cats that have been injected with LSD.
So true. Well, and the municipality doesn't help, right? I mean, like, it's insane. I mean, we talk, like, the shit we're dealing with in LA around just power, like permanent power, is the hardest thing to acquire for a building. Like, I mean, we're we have a project that's 5 stories up on a 7-story building, right? We're like in the throes of construction. We submitted our power application in 2018. They literally sent us the first drawing yesterday. I mean, how do people think about all of the bullshit that we have to do? Like, how much capital do I have to raise? How much debt do I have to get? How much risk do I have to take to actually literally put that building up? Not even knowing where my permanent power is going to come from, which has literally just been a gray hole in my underwriting of it could be $200K, it could be $1 million. I have no idea. I better have enough room, right? And that's like think about how awful it is, right? I mean, so like, it's so funny because like technology is just moving so much faster than us as people, as a society, and it's just breaking stuff. And so like, to your point, I think where it could accelerate is sort of like a different kind of thought process, which is, all right, forget upgrading the infrastructure in Los Angeles. Let's just leave, right? It's just like, we're just going to go to the desert and I'm going to literally put up a bubble, which I'm sure that Elon Musk can figure out and to, control the climate. And we'll just start the city there and put all the infrastructure we need, right? And there's plenty of space if you go to the Midwest, right? And so like, if you really want to get into those like crazy, or maybe not crazy, like thought processes around like how it could go a lot faster. I mean, look at Texas, right? Which is just a massive landmass ultimately. And they're building, communities faster than we can even realize, and people are moving there in droves, right? Because it's, it's cheaper to live. It's, the weather's good and it's just an easier way to kind of get around. There's a lot of things that have been modernized, right? And we're stuck in these old school cities like New York and LA and San Francisco that have, no infrastructure. There's no ability to fix it. I mean, just commuting to New York City. I live 20 miles from New York City, in the throes of like the height of it, 12 months ago, you leave my house at the wrong time. It takes you 2.5 hours to get there. I mean, that doesn't make any sense at the end of the day. So like at some point, like that will get fixed and it will make the city less valuable. I agree. I do think that there is a time limit, right? So the question would be is like, can the city make it better, to avoid its own death, right? By death by regulation, which I think is the impediment to a lot of that stuff. But it's really a good, it's a really long real estate discussion. I mean, there's a lot there. I mean, we can unpack that for hours, honestly.
Totally.
It's super interesting.
Yeah. I mean, I've been trying to process it in the context of my own investments and in the future of how I spend my time, really.
Yep.
And I think ground leases are one interesting path, but you ultimately go back to the same question, which is if location becomes irrelevant, how do you value this asset?
Right.
And I think that may have some larger structural implications on the real estate and real estate capital markets.
Yeah, no, listen, I don't disagree. I mean, I think the good thing for us is that, we're in our late 30s already. It's realistically probably not going to kill us, right? In the sense like we're probably not going to actually be in the business long enough in a meaningful way for some cataclysmic change like that to actually destroy our own business or our own investments. But that's, but going forward, like if you look at a long view, right? I mean, I think the risks are enormous, especially if you also take into consideration what's happened with kind of the debt bubble of the world, right? Asset value. So it's like the crash is so big, right? Monetarily too. If something like that changes, like it's just a cataclysmic disaster. I mean, I think, look, I love real estate. It's a great business. I'm glad I chose it as a career and I'll always probably be in it, but it's still a means to an end, right? Like I want to do real estate deals for the rest of my life, but not in the context of like, you see some of these like real estate moguls where they're going to literally die in their building, right? Like I don't care about it. Like that's just not on my the top of my priority list. It's about making money thoughtfully on a risk adjusted basis, for myself and my family. And then, hopefully getting to a point where I can spend more time doing other things, right? I mean, that's the reality. And I think it's what you're looking at right now. You're looking at how do I've had a lot of success in real estate. It's actually given me the opportunity to kind of even look at this as an option, right? And that's kind of how I do it too. I mean, I'm in the middle of building my company, right? It's a 10-year plan. We're on year 4, right? And so But at the end of 10 years, if it works out, like I'm not gonna have to work, if I don't want to, right? And that's the benefit, and so it's a means to an end. But yeah, I mean, to the point of just like, owning real estate forever in a certain location. I mean, it wouldn't put in past me right now. I mean, who knows? What if Earth isn't even the best location?
Right.
I mean, like literally, we have these, like, I see an article every other day. Oh, we're going to be in Mars in 3 years. What should we start buying land on Mars? I mean, not to be ridiculous.
That's a legitimate question.
How do we buy land on Mars? I mean, the people that bought land in the U.S., right? 200 years ago, they crushed it. So let's buy some land on Mars.
Elon Musk, if you are somehow listening to the 8th episode of the Justin Palmer Show, we will option dirt on Mars if you can figure out how to do a title search.
That's right. It's so funny.
That's fucking. It is crazy. You can go down those paths, but I think it's even the thought process is helpful in how you're looking at your own business or how you're looking at making an investment. I think it's beneficial to try to think about those things, because what it does is put the exit plan at the forefront of the discussion, right? How are you going to make money on this? And what is that? If it's 3 years or 7 years or 10 years, whatever it is, you want to know that going into it. And that's one thing that nobody teaches you that in life, right? You kind of, like you said earlier, you learn that through experience. You learn that through getting burned and realizing, oh shit, I didn't really have a great plan on the exit on this. And now everything I do, I'm thinking about what is the monetization strategy? What is the exit strategy for anything that's commercial oriented? Because otherwise you just don't have a plan.
Yeah, no, exactly. I mean, there's a reason why most of the capital, right, that exists to invest in an asset class like real estate have been designed as closed-end funds, right? Because they're all thinking the same thing. Right? They're just saying, how do I harvest and kind of move on and, reassess, right? And that's what those types of things do for you. Even though, the way that the tax code is written, the way that historically things have been, that's actually a detriment to the real estate. But to your point, as things continue to change, and it seems like they're changing just more rapidly, it could turn into really the most important thing. And a way to at least look at it and say, this is where I can cut it off. This is where I can, make sure I don't cut my legs out, by going all in.
Yeah. Yeah. And I do think to some extent it's been a little bit of a disservice to society to have all this institutional capital structured in closed-end funds. And what that is, they're funds that have a specific lifespan. So whether it's a 3-year, a 5-year, a 7-year, or a 10-year, they work on monetizing on that time horizon. And I think it's had impacts on how cities have evolved. Because if you look at going back to the 1920s or 30s, it was mostly private owners that built their business over extremely long periods of time, 3-4 decades. And they thought like a true owner of those properties. And they were people. It's interesting. I had this discussion with my friend Sean Perriman, who was on the show a couple of days ago, about police. And it's the same. Everything is tied together. Policing in a community that you're not a part of has inherent risks, because it's not your community. So you just behave however you want. It's the same thing with investing. If you're investing in neighborhoods, there's been this element of community that's been stripped away from American culture, I think. And I don't know what the solution to it is, but I think it's a problem. I think it's a problem that you have all these big companies investing, but they don't have real local interests in that area. You don't have an interest in that coffee shop making it, other than it's providing profit or it makes your building more valuable. I don't know.
You're right.
Seems off.
The real estate business, right, has really grown up the last 40 years, right? Prior to that, it was guys like the Pants, right? Who they'd save up money, they'd buy a building, they'd work it, and it'd become part of the community, right? They'd know all their tenants by their first name, right? They'd go to dinner with, the owner of the restaurant, and they formed a relationship. Yeah, to your point, like, now it's just a very, very cold situation, right? It's just like, I'm investing in this building so I can make a 15% IRR. And the minute it's time to exit, I'm going to exit, right? And I don't give a shit who lives there, and I don't care who I affect by building it. There's no like, totally. I mean, it's sad, but I think that is what we've become. It is the market, but to your point, yeah, it's certainly not fostering a community by any means, right? It's, when you build a building in a certain neighborhood, then you've never lived there, right? You don't actually know anything about how it's affecting people that live there. Even in a place like LA where they've underbuilt housing for decades, and like, you're doing something good, right? But like, how good are you doing, right? There's always somebody else on the other side where it's like, wow, you just like, you literally knocked down my neighbor's building, and now you're going to put up a 7-story building in what was a single family home neighborhood, that people were living there for 50 years. Like, it's not necessarily fair to them. But it's also not fair to, the people paying outrageous amounts of money to live in other buildings, right? So it's a problem. But yeah, I agree with you. It's, it's an issue. And it's certainly created a lot of angst, and the haves and the have-nots, right? The gentrification, bubble, it's real. People are being pushed out of their neighborhoods. It's happening everywhere. It's not even just cities. It's right. Suburbs too. It's just a problem.
Yeah, it seems to me like this is one of the issues that has to get dealt with quick. There has to be some solutions designed around this, and I don't know. I don't even know how to tackle it. I spoke with my friend Sean, who's running for lieutenant governor in Virginia, which is where he lives, and I think it takes more people like that of making the choice of, I'm going to hit pause on my career and run for public office because there's some things going on in Virginia that he doesn't like and he wants to change to just help update society to the 21st century. And I feel like there's a new breed of non-political politicians that need to come out, right? I mean, we saw what happened in 2016. I have no clue what's going to happen in 2020. None. Like, I really don't. But and I don't even know that it matters that much, other than the fact that people are gonna, like, a large population of people are gonna freak out no matter what happens.
Yeah, no, I know. I keep telling people, like, I'm scared either way. Like, kind of what happens. Like, if Biden gets elected, right? What's the economic change? Do businesses retract? Like, what happens? Who knows, right? If Trump gets elected, like, are we just gonna have riots for 4 years? I mean, it's just, he's so polarizing, right? And I'm not really a supporter of either side, like, or either person, if you will. I'm just more like, obviously, I think being a business owner, right? I'm probably more on the Republican side than anything, but like, not to turn it into a political discussion, but it's it is really scary to see, like, what are the ramifications either way, right? Because I think this is, in my lifetime at least, this is probably the most like debated, heated, election by a wide margin, right? There's just so much disaster going on, right? And I think if you look at if you just look at the pandemic, right? Like, I don't think anybody really knows what's the truth. Like, is the media basically making it worse than it actually is? Or is the media actually trying to sweep it under the rug? I don't think anybody actually can answer that question. Like, it's really weird. Like, it's sad. Like, they've turned it into a complete political situation on both sides. Right. And that just doesn't make any sense. Like, people are dying, and we're talking about votes. I mean, it's just, the whole thing it just makes me sick, to be honest.
Yeah, it's, well, I think politics, and I'm still not interested in politics. Right? Yeah. I'm just uninterested in a power grab by a couple of people trying to push an agenda. And one thing I am interested in is finding a way to come back to the center, where you have to realize in any position, and you learn this running a business too, when you're managing people. There's your way. There's the way that other people view it. And then there's the way that's like in the middle that helps make your team happy and helps make you happy as the owner or manager or leader or whatever you are. And we've just, as a society, we've gotten to this place where like you have to be here or you're over here. And and in between is no man's land. And it's not working because people stop communicating. And then we start pointing the finger saying, well, it's them. No, it's them. No, it's them. Like, you have to teach this to kids, right? This is what I'm trying to instill in my kids, is that if you choose to hit each other and fight, that's one solution. The other solution is talk it out. Just communicate. And I feel like that's kind of been cut off. And maybe it's a result of people, the current generation that are leading, not really understanding how to communicate in the new age of technology, not really understanding how to interact with people in a completely different way. Because you hear everyone's voice. So the media has latched onto that and taken things and I feel like they just, no matter which side it is, they just spin things completely out of control. And you're right. Like no one knows what's happening right now. I don't think COVID is as bad as it's being made out to be. I'm still being cautious because I have a family to protect. So I'm wearing a mask. I'm doing what I think is responsible. But I don't know if it's dangerous or not. And I'm dealing with shutdowns and a second lockdown and new rules in place. And there's a semi-police state happening on every corner, which is scary in its own right. And I think I think it's going to get worse before it gets better, unfortunately. And I think it's up to people like us. And this is part of the reason why I wanted to launch the podcast, was just put a voice out there. Just talk about this stuff. Because if it's not being heard in the mainstream media, somebody has to talk about it, you know?
Yeah, no, I don't disagree. I mean, somewhere along the line, like people, I don't know why it became okay for, if you were on the other side, right, or whatever the issue is, doesn't matter what it is. Like, hey, I believe this, you believe that. Like, I don't know why it became okay to just attack that other person. Like, when did that change? Like, I just feel like it was never this bad. Right now, it's like no matter what it is, right? It doesn't, like, literally anything. You could go on the dumbest app on whatever that has any social aspect, and if a person posts anything, literally could be the sky is blue. There's going to be someone in the comments to say, no, it's fucking green, right? Like, why? Like, why does it have to get to the point where we're just going to insult people over and over again? And then, and then I say why, right? And then I watch like a political debate, right, between what's supposed to be like a leader of our country or prospective leaders of our countries. And instead of debating over the issues about how you're going to solve them, all they do is attack each other. It's like, well, I guess, what we expect my 14-year-old, daughter to do. Probably just attack people, right? And it's like, it's sad, like that's what we're creating. And I think, social media and like the access to iPhones and all that stuff's great. And I think I'm for it, but it certainly hasn't helped, right? And I think the outlet of being able to access, to your point, like get a voice out there, but also like, if you post this podcast, right, on Instagram next week, and they hear this part of the conversation, there'll be 56 people in there going, look at these Republican assholes, that's what it'll be, right? I mean, and it's just sad. Why does it have to be that way? Why can't we have a productive discussion about moving forward as we, not like us against them? Like, we're all in the same place, and most of us all have similar goals. It's like trying to protect my family. I'm trying to make more money so everybody's happy. I'm trying to move forward. I'm trying to grow. I'm trying to most people are in that same camp. It's like. You look at police officers, right? Do you think that those guys leave their house in the morning and say, "Oh, I don't want to come home to my kids"?
No,
like, no,
not. Yeah,
I mean, it's what they want to do, right? And I'm sure that the people that are involved, like even causing a ruckus, right? They go to a violent protest. Do you think that they don't want to come home from that? Because that's happened too now. People are going to protests and dying. I mean, what? Like, how is that okay? I mean, it's just like. On both sides, like it's just horrible. I mean, like, and you look at on the police side, it's like, what incentive do you have to be a cop? what incentive do you have to even be a teacher, right? I mean, we keep destroying like critical like jobs in our country of like, roles, and say like, oh, it's bad to be a cop. Like, well, you know what? We're just gonna have less police and more people are gonna have guns. Are you just okay with living in that society? Are you prepared for that? I mean, gun sales are at record highs right now. I mean, I have like 3 friends in the last like 2 weeks and like, oh, I just bought a gun. Like, really? Why? I mean, it's New Jersey. No one has guns, but it's kind of funny. But like, it's the norm though in some places. But it's just like that. That's just sad, right? And I asked them, like, well, why did you buy a gun? And they're like, well, it's just one of those things where it's like, who knows? Maybe it's like
it's insurance policy.
Like, what are you preparing for in your mind? Like, that's scary.
Yeah. Well, I bought 2 when I moved, and
there you go.
I bought 2, and this was early. This was before the pandemic had really kicked in. But one of my first objectives was I need to get tools to protect the family in like a home invasion scenario. And I don't know if that was because I'm moving from a big city and I'm used to just having a doorman stop anybody that walks in the building, and so there was some insecurity about being able to control that. But I also when I bought them, I fully understood that I have a responsibility to learn how to use them safely to the best of my ability as a human. Right. And I've used guns plenty. I've been around, shooting ranges and stuff like that. But even the specific one weapon I bought, I'm very comfortable with. One I bought, I'm not as comfortable with. And it's locked up with ammo, locked up separately. And it has to be that way until I'm more comfortable with it. But I get why people are doing it. I get why people are doing it. And I never would have thought about that. 3 years ago, I wasn't even thinking about that. But I agree with you. It's almost like we're in the middle of a decentralization of society in a way, where education, police, all these things are being decentralized. And if it's done well, that actually can be a good thing. If it's done responsibly and slowly and efficiently, I think it can be done in a way where people may be better off. Right? Homeschooling your kids, which is not the most efficient thing to do from an economic perspective. If you're focused on one thing I've been asking myself lately is like, why am I spending all this energy trying to acquire a bunch of fucking paper that I have to just give back at some point in time? And I started making more conscious decisions about how I use my time, being present in the moment with my kids instead of trying to move on to the next thing. And I think it's a good thing. I think it's a good thing if parents can do that. And maybe a solution for that is some sort of hybrid in-person home schooling. It reduces the load from a tax burden perspective. I mean, you have to completely change how communities are built because the size of the school you need is now half, right? So I think a lot of these changes are on the horizon for society. And I have no idea what any of the solutions are. It's just, this is where my thoughts are going on this stuff. And I think you brought up some great points about we have to stop polarizing everything. We have to just get back to the center and understand that on the other side of the argument is a human, and that human may have views that are different than yours, and that's okay.
Yep. No, that is the truth. And we're very far from that. And that's, I think, is the biggest problem with, where our presidency has gone, right? It's purely polarizing one way or the other, whether you believe in it or not. And so there's no middle. And that's just a dangerous place to be. That's how wars start. Two people on either side, right? Afraid of the convergence, right? That's a bad place to be.
For sure. Well, and the combination of a toxic debt load on the country, right?
Yeah.
We have a toxic debt load. And if you look at history, the countries that ended up collapsing were the countries that just had insurmountable amounts of debt. And I think you're right. It forces you to either go into a situation where you start a war to start paying the bills, or someone attacks you because they see that you're weak.
Yep.
And
Yeah, no,
that's a
it's
scary
really
thought.
scary.
Yeah, that's a scary thought. Well, I never like to end on a dark note, and so I'd like to transition.
Yeah.
There's one other thing I wanted to talk to you about, which is you have an interest in poker, and I think a lot of your business sense comes from some of the lessons that you've learned from gambling in general. And I would love to hear your philosophy on that.
That's super interesting. Yeah, listen, I mean, I think I started playing poker back in, I want to say like 2003 or so in college. And, I went to the University of Delaware, which wasn't far from Atlantic City. And so we would take a lot of trips there all the time just to kind of party, and so I ended up at the poker table a lot, just trying to learn the game, and really enjoyed it because at the end of the day, poker is really kind of like a math problem, and a situational problem, right? It's like dealing with people, understanding how they think, what is the math behind that? And, basically on a risk adjusted basis, what do I do? Right. Which is basically how life is, right? If you think about everything that you do, whether it's investing or just, how you strategize, how you like get to the next step, whatever it is, there's all of those like factors that have to come into play to make a decision that you don't know the outcome, right? And all you can do is kind of create the best bet. And so I think poker resonated really well with me because it's just like very similar to those things, right? And I spent a bunch of time, really like from like 2004 to probably 2010, playing a lot of poker. And that like not a coincidence, right? I mean, if you think about what happened in the poker world, like there was a big kind of change. It became more popular in this country. Right? I mean, just more games were happening. The World Series of Poker became super popular. Online poker like started to happen in an unregulated reality, right? Of like what the hell is happening here in the U.S. And so during that time, I remember I read every book. I played so many hours of poker, and I would, because I was an entrepreneur too, I had more time, right? Because I didn't go to work 9 to 5. I could put my hours in whenever I needed to. So it kind of created some freedom to spend more time playing. And I had a lot of success with it, but it went up and down just like anything else, right? Poker, at the end of the day, it's not 100% skill, but there's still some luck factor, right? And so you go through swings, right? But I think that taught me a lot about how to operate, when things aren't good, right? Because the way that like most professional poker players, and I was not professional by any means, right? But the way that they think about it is, if I keep making the right decision in every situation, in the long run, I'm going to make money, right? I have to make sure though that I can withstand the swings, right? So bankroll management, not putting all of your chips in essentially one game, right? Choosing who you play against, right? All of those things are very critical to making money in poker, and they're super critical in business and super critical in life, right? I mean, like if you're a 28-year-old single guy and you keep trying to date models, right, and you're just not that good looking, like you're probably gonna keep losing, right? Like you need to know who you're going against, right? And try to pick some like not quite as hot chicks and go after them, right? Your success rate's going to go up, right? I mean, so like it kind of applies to literally anything, which is what I loved about it. And, and so, unfortunately I haven't really played a lot of poker in the last 5-6 years. I mean, mostly because of family, right? I mean, the time that I don't work, I'm spending with, my kids and my wife, doing those things, which is, what I choose to do, right? I mean, that's what I want to do. I love poker and I would love to get back into playing on a more regular basis, but it's going to be a long time for that.
What's the biggest swing you've had? I mean, have you had some like real hair raising moments?
No, nothing crazy. I was always conservative, partly too, because I didn't have a ton of money, right? I was reinvesting like anything I made into the business to grow it, early on in my career. And even just like, since I then moved on and had a regular kind of job, I got married, had a family. So like I'm very conservative around like how I gamble. But I think, the best story that I could probably give around like poker is an interesting kind of way to think about it, right? I remember one day I think I had about like $5,000 or so, and I was playing with a bankroll, which was essentially 2 buy-ins to this game. So I would go to Atlantic City probably 3 days a week. And you buy in for $2,500. You play 5, 10, kind of know when to hold them. And so the pot sizes get pretty big, right? And like, putting your buy-in, in a hand, like, happened a lot, right? And so I bought 2 buy-ins, which was probably not enough. I was probably paying a little bit too high. But the part of the problem was that when you go down during the week, the smaller games actually wouldn't happen, and the bigger games were the ones that were happening because it was just more money. And so I was trying to move up the ranks, play against better players too, just to kind of grind. And I brought 2 buy-ins down. I remember I sit down at the game. I buy in for my first buy-in, $2,500. The first hand, I get dealt aces. Best hand you can have in poker. And if you played, end up, playing it right, getting it all in before the flop, because the guy just went crazy and he had ace king. And, I'm not going to tell bad beat stories on a podcast, but what happened, right? So I'm like, all right, well, look, it's part of the game. I'm going to buy back in again. I got my other buy-in. That's why I came. Hopefully I'll be here for another 10 hours. I stick the next buy-in. The next hand, I get dealt 2 kings. We do see a flop, but it eventually all goes in. Same thing. Gone, goodbye, see ya, 2 hands, right? I'm literally out of money. Now I'm like steaming, of course, right? If you play poker, you're just on tilt. And I was like, I could go to the bank right now, but I'm not. I just got back in my car and drove, an hour ride. So I literally drove an hour, played for all of 6 minutes, lost both buy-ins and just left and went back. But in the hindsight, it's like, you know what? I did what I was supposed to do. Right. I didn't go on tilt. I didn't go to the bank, take out 20 grand and just act like a moron and blow it all, because that's what a lot of people do. Right. And that's exactly how you can get really hurt in anything. Even, look at the stock market, right? If you have that same mentality, you get crushed. Right. And so you can apply that to so many things in life. Right. And so, it's kind of funny because poker too, it's a really hard game because you don't remember your wins. You only remember your losses. So I'm sure there were plenty of times where I went down and ran really good, ran it up, got lucky. But you don't remember those. You only remember the disasters. It's just one of those things.
Those are the learning lessons, right?
Exactly. You learn more by losing and failing.
So don't go to college, folks. Learn how to play poker and learn how to play it well.
That's right. Yeah.
Right.
Listen, you want to make, you can make $100 an hour playing poker if you do it right. You got to practice. Just like anything.
For sure. Yeah. Just like anything. I love that. Well, I think that's a great note to end it on. If
Cool.
That's good for you. I would like to give you an opportunity to tell people where to find you, your website, Instagram, whatever your preference is.
Yeah, absolutely. Yeah, the easiest way to find me is by email. If you go to my
don't
website,
give people your email because you never know what this. Hang on. Don't give people your email, please.
Yeah, no,
I have no idea.
All good.
Give them your website.
If you go to my website, 6bcapital.com, you can hit a contact us, button and send me a note, and happy to chat. So I'm looking forward to speaking to a few of you.
That's a wrap, folks. What an incredible conversation with Chris, filled with insight, a lot of ideas thrown out there. And I hope you guys took something away from it. Most importantly, just the power to keep going through, keep moving through whatever it is you're doing, whatever business you're in, whatever you're pursuing in your life. Chris's story is phenomenal. Check out his website, Six Peak. Those guys they're building incredible things. It's hard to explain how innovative it is in the real estate space to build non-traditional studios, 1 bedrooms, 2 bedrooms in urban markets. Those guys are true innovators, and I'm looking forward to having Chris on the show again. Check it out. Check out other episodes. Shout out to Chris Williams. Thank you, everybody, for listening. I appreciate it. Have an incredible day.